Hey, what's up guys, Alex here, hope you're all doing good. So I'm going to do a GU recap video for a trade I took last Thursday. It was a GU long, which I ended up holding a partial position through NFP, which I'm going to explain my reasonings and there'll be a few little mini lessons within this recap as well. But as always, starting on the higher time frames, just to kind of paint the bigger picture, the narrative behind the trade. So, if I go all the way up to the monthly, it's a fairly clearish bearish trend. We've got this break of structure here, this being the lower low, and we're in that pullback phase, fairly simple. In terms of, how big we can expect this pullback phase to be, I do have some favorable zones. This one here, because this is where the initial flip or interaction with demand occurred, creating that initial reaction, the extreme of the reaction leg, and then the failure. And then kind of anything inside this is more so, more seen on the weekly, the daily. And if we kind of analyze, we got this zone here, for example, right? But if we kind of analyze the purpose behind that zone, what we can expect from it, it goes back to kind of this front leg, bringing us back into these areas and kind of who is in control of the market at the current moment. And so if we identified that, we're breaking areas of supply, we're breaking some internal range liquidity, we've got all this kind of internal range liquidity within here, we're breaking the initial pieces, we're breaking the pieces here as well. But then importantly after that, we're holding demand areas, we're sweeping some liquidity, we're holding demand, and we're continuing to react, fail supplies, and then hold demand. So we very clearly have demand in control on a higher time frame, on the weekly time frame. Understanding that overall we're in this pullback phase, but demand is currently still in control. And so we can't necessarily predict the top or predict the turnaround point where we're going to eventually perhaps turn around and continue with the monthly bearish trend, if we do that in the end. And so at the moment we're still very much bullish, and so when we kind of identify this zone here, I'm going to be treating it as a catalyst for a pullback, just expecting price to, yes, give some sell opportunities potentially, but I'm not going to expect these sell opportunities to all of a sudden hit oblivion. More so being the pullback phase into perhaps some areas within here which are now more visible on the daily. And so if we identify, okay, this is a catalyst for a pullback, a supply zone, yes, but I'm not really expecting a huge move from it. I'm more so favoring the supply above, which I should clarify, like I say, is because it was a flip zone, but it is also part of where the initial supply chain occurred. And so there's kind of a rule in my trading plan of never expecting the chain to fail. You can play up to the area, or you can wait for it to break and then continue trading, past it. But I don't want to assume that it will fail, and it's the same on any time frame. As you can see, this one here isn't part of a chain. We have demand in control, so I'm not really too concerned with it. But going down to the daily, identifying the structure, we can see that we're printing, higher highs, higher lows. And so just quite clearly in terms of just simplistic daily structure, we're very clearly bullish. And taking into account what I mentioned on the weekly with this kind of CPB that we're coming out of, yes, I'm expecting some sort of movement from it, but how big that movement is going to be, perhaps not drastic, right? It can obviously bring us into these areas down here, into here, and maybe even break the structure. But I don't want to assume that it will at that stage. So kind of being nimble with the realignment back bullish if we get the opportunities, and obviously if we have further sell opportunities, just still considering it to be the pullback phase, and at some point we can continue higher. So that's kind of how I was viewing the top down analysis of the weekly, the daily, and kind of coming to current price where we can use more time frames that are actually going to help us in terms of executing the trade, because obviously we can understand the bigger picture or the narrative, directional bias, bigger picture long term. But in terms of the time frames that are actually going to be useful to us, it's more so going to be the 4-hour and the 15-minute. And so for this trade, it was a long, I should say, but kind of coming into that picture, we didn't initially have the long idea at the start of the week. And the reason it changed, or I should kind of just go over why it changed or what the initial plan was. But basically we're coming into this area like I mentioned, right? And we've got bullish 4-hour structure, as well as we had daily structure bullish as well. So we had the breaks of structure printing higher highs, of course. And then this is where it changed, right? So we had this break of 4-hour structure here. Now, obviously at this stage, we've only broken with a wick. We eventually went and broke with a body, a bit more of a solid confirmation that we have in fact broken that structure. But more importantly, if we think about this from a supply and demand point of view, this here being kind of the extreme area of demand of this bullish structural leg, we actually break this area of demand here. And then we can ask the question, okay, well, we've broken demand, is it a liquidity sweep? Is it a break? What is it? And we can kind of confirm that by, what happens next, basically. And so we've broken an area of demand here. And then if we track back from where this break occurred, where is the last area of supply prior to this sweep? Well, we have these buy to sell wicks, buy to sell price action. We have supply in the market here, which is more so confirmed once it holds. It actually holds here. And then continues to break, to the downside. And so by the time we get to this point in price here, when we've had that, secondary break, let's say, or, you can argue it's a more so confirmation that the first one has broken now with a body. But from a supply and demand point of view, we've broken demand here, we've held supply here, and then we've continued to break demands. And so not only have we got a structural bearish break, but we've also now got supply in control of the market on a 4-hour time frame. And so we've basically initiated that daily pullback phase at this stage. And so as we continue down, we're continuing to chain from supply or hold supply. Supply remains very much in control because we're still continuing to respect it. We've not had the opposite happen where we've broken supply and we've seen demand hold afterwards. The latest information we have is that demand broke, supply held, continues to break demand, continues to hold supply, continues to break. And so as we're heading into kind of the start of the first week of September, really, where this trade occurred, we had supply and control of the market. So, okay, we have an area of supply here, which was great. And if we were to just kind of continue monitoring price, obviously the trade is in here. So I'm going to continue just marking up what happened. Initially, my idea was to look for sells from here because supply was in control. The idea was to see if we get a pullback into there with further sells. What ended up happening is we respected these buy to sell wicks, which were actually the last point of supply prior to a daily mitigation here, which I've not actually drawn up because it's not too important, but it was the last point of supply prior to that. But nonetheless, we're still just respecting supplies all the way down. And so, the idea was to, while supply is in control, obviously to continue selling. And the idea would be, we're in this pullback phase. We can start looking at internal range liquidity pieces to the downside in terms of, things such as these structural pieces here. As long as supply remains in control, we have some reference points of targets in mind. But then coming into, Wednesday, coming into Thursday, if I just kind of continue marking up these supplies, supplies continuing to chain, and we're kind of at this point in time here where, I'll just move that in a little bit, supplies continuing to hold quite clearly, right? We're still breaking lows. We're in this kind of bearish leg in price, and the idea would be coming into Wednesday morning to continue looking for sells, right? Or if we have intraday reasons to long, then we'll look at intraday plays. But from a 4-hour point of view, I'm going to go down timeframes in a moment, but from a 4-hour point of view, the idea would be to still sell while supply is in control. And so that would only change if this 4-hour area breaks. For example, if I go down to the 15-minute now and just kind of explain what I mean by this. So if we start the day, this grey square is the Asian range, right? So we come into London just after this, Frankfurt here, coming into London at 8 a.m. UK time. The idea is that we are in basically a 4-hour pullback phase because we've got this bearish 4-hour order flow here. So that would determine that at this point in time, obviously before this is broken, so let's say this is still intact at this stage, any longs below this area I would deem as the pullback phase into this area to then continue looking for shorts. So any longs at this point being short term. And so we can only take these longs realistically if we have an intraday reason to do so or intraday order flow. And so what I mean by that is the 15-minute time frame being our intraday guide, and basically just monitoring the order flow on the 15-minute. And so you can kind of see we're reacting from 15-minute supplies, we're respecting 15-minute demands, we're continuing to respect 15-minute demands. We have this little liquidity sweep in here, which is great. But then, let's change that color. Then we continue to push up, break more supplies, and we're getting these nice little demand chain in here. But the idea is that I don't want to, if I'm looking to long from these, these New York session on Wednesday or even London session on Wednesday, my idea wouldn't be that we're going to hit the moon or even come anywhere near this high. The idea at this stage is I don't want to predict that it will do that. I don't want to predict that this supply chain will fail. predict the order flow will all of a sudden turn around and be, the hero that calls the bottom. The idea is that at this stage in time, if you're taking longs in here or in here, that I don't want to kind of shoot past this area, or at least if I'm gonna kind of expect price to go higher, the idea is that I'd at least pay myself with a partial profit before that happens, right? Before we actually expect this to break, because it doesn't have to do that. We can just simply pull up into this area and continue lower. So this being more of an intraday long into this area here, and then only expecting further upside potential once we actually break this chain. So this is kind of what happened here. So if I go back to the 4 hour, you can kind of see at the moment here, we've got supply and control, right? And we're going towards potential downside targets, understanding that the sells are the pullback phase. It doesn't have to be a big pullback phase because we're still in a bullish market. And so if we can get ourselves realigned back long, it would actually be a more favorable opportunity, because like I said, it would align then with the daily trend, the weekly trend. And so if we can align the 4 hour as well and the intraday, it'd be amazing. But the idea is we've now broken this 4 hour supply chain. So any longs, like I said, prior to that breaking would be thought of in the short term, because of the fact we've got 4 hours supply and control. We're playing this pullback leg. It can continue dropping. But now this 4 hour supply has, been broken. The idea is that, perhaps something's changing. Perhaps we're realigning back bullish. So if I just move that a minute. So as you can see, we're coming into this original zone, which I had marked from, the previous week, basically. But now we've not approached it in the same, circumstance, the same situation. Whereas when I originally marked this up, we had breaks of demand, respective supply, continue to break demand, respective supply, continue to break demand. And so the idea was to look for sells as we come into this to continue that next leg down. But now we've had supply continue to hold further down, right? We've got this new kind of supplies down here, which we've now broken. The purpose behind this supply is kind of ambiguous, right? We've not got confirmed order flow necessarily with supply and control, because we've just broken this supply. And we've not really yet, as we arrive into the zone, got demand in control either, because we've not yet broken the supply and held demand just yet. And so it's kind of a neutral zone. It's kind of in between. Like I said, I've got a CPB for this one because demand is in control very clearly on the weekly. So on the weekly, demand's in control. So this is a CPB. If we've not really got clear control of the market, in terms of we're in the process of either changing control or we've not yet established control in either direction, we've broken kind of both sides of the market. Basically, we've broken demands and broken supplies. We're yet to see one hold just yet. The idea is that this, I don't want to suggest that it's going to be to do this or it's going to be a pullback. At this stage, it's kind of undetermined until I see evidence one way or another. And so at this point, I'm just going to put it as grey, as a neutral kind of area. So my idea, like I say, is preference would be to get long, especially now we're aligned with the daily. We've broken the initial IRL, because you can keep in mind as well that as we're building out this front leg to the downside, this is all just becoming internal range liquidity. And so if I just mark up the highest point of the internal stuff, obviously the external is here, but the internal from this point into this point here, we've broken that initial piece. So the idea is if demand can now maintain control once that initial piece has been broken, the idea is we've confirmed upside target of the remainder of that internal range liquidity. So what we need to determine is if demand maintains control. And so when I go back down to the intraday time frame, delete some of these lines. This here is where the 4 hour supply broke. Obviously, we already had 15-minute demand in control down here. It then broke the 4 hour area. And so the idea is that we want to see if demand can maintain its control that it had down here, and thus confirming the rest of this as upside target. And so once this held here, it was, late in the day, Wednesday evening, demand continued to hold, right? And it continued to break above areas of supply. And so now the job the next day became very easy, because we've not got any arguments to the downside at this stage, because of the fact we've just broken the 4 hour supply and then demand is continuing to hold, break further 50-minute supply. So we're aligning the time frames. And so this is the Asian range. Like I say, we come into Frankfurt, London Open, and we basically have demand in control of the market. And so kind of as we start in the session, this is in Frankfurt here, we've got this demand chain down here, which isn't necessarily the overly important thing. Like the specific zone of choice isn't the important thing here. It's more so playing away from the liquidity sweep in direction of the order flow, right? So we've got demand in control already. That's already established. And so now I'm just looking for the liquidity sweep to then look to play in alignment with the narrative that I've just been building on the 4 hour, with the targets, the intraday, in alignment with the daily, weekly structure, etc. So this is pre-session anyway. It's a really simple trade because we've got the order flow established. We've now got the liquidity sweep here below the Asian session, but really I'm thinking about as a structural sweep. We have that liquidity sweep here. Now, in terms of like thinking about targets, I always have two targets, right? I always have the intraday target and then I have the higher time frame target. And so that would be the 15-minute target and then the 4 hour target, to be quite simple. And so we're printing 15-minute higher highs. We've got order flow in our favor. If we're looking to get long from this area following the liquidity sweep in alignment with the order flow, the idea would be the first primary target would be the 15-minute target, which would be the high here. And then the secondary target, you already know, would be the point up here. So obviously this one is quite far away. So the idea behind the two targets would be to make sure I'm paying myself from this position, because okay, we might come up to here, right? But it doesn't have to do it in one smooth motion. It can take out your first target, for example, come back down, mess around, respect something in here, continue, and then hit that target, right? And so you don't necessarily know that from this specific position you've got involved in here, this will be the one to hit this 4 hour target, because I'm entering on the 15-minute and using the 1 minute, right, to execute. And so it can do what it wants basically before hitting that target, because on the 4 hour, it doesn't have to respect this necessarily here. On the 4 hour, who's to say that we've broken this 4 hour supply? It can certainly come down into this 4 hour demand and then hit that target. It doesn't have to necessarily hit it from this position here. So it's very important, in my opinion, to have two targets, at least paying yourself from your intraday position or intraday target first, and then having this 4 hour as your secondary target. And so you can split the partials up however you want. For me, I usually do it 70-30 or 80-20, making sure you pay yourself basically. And so if I go down to the 1 minute to show you the execution, you can see ahead that the trade is very much thought out ahead of time. The targets are thought out ahead of time. The order flow is established. I've got the liquidity sweep. I've got the reasoning behind that, with a higher time frame. It's not just a random execution, although, you get a kind of a funny, people think of you a bit weird when you say, I execute on the 1 minute, but the execution, yes, is on the 1 minute, but it's not, I'm not trading the 1 minute chart. I'm not trading all of this, whatever it is. It's simply a confirmation of this 15-minute zone or of this liquidity sweep, whichever way you want to look at it, which is in alignment with the higher time frames. You can see the bulk of the work is on the 4 hour and the 15-minute. This is simply to execute upon that idea as you come into your session. And so we've got this liquidity sweep here, which is great. We've got the mitigation of demand. Now we need to identify, where our last point of supply is prior to this sweep, because okay, we've got breaks of demand, supply is holding on the way down. So on the 1 minute, it's all fractal in nature, the concept. So the 1 minute is with supply and control. So the idea is you want to see that shift back to align yourself on the 1 minute with the 15-minute. And so that doesn't mean just taking a break of this and expecting this to hold. This demand here, for example, wouldn't have to hold, which is why when I explain it in a second, I want to see evidence that demand is holding, something we call the first level of respect of demand before getting involved in the trade. So this here, if we track it back, this is the sweep, this is the line of the sweep, this is the mitigation. We track it back, the last point of supply prior to that sweep is kind of objectively there, right? That is the last point of supply prior to this sweep. And so the idea would be, I want to see this fail. I want to see this fail before even thinking about getting involved in a 1 minute execution. Of course, if you're entering on a different time frame, you might already be in off the 15 minute or off the 4 hour or something, but for me, I like to confirm on the 1 minute. So my idea would be to basically wait for this supply to fail. So if I just play it on along a little bit, this is in Frankfurt, so it's a little bit before session anyway, if you're thinking about London. So you can see here, okay, we get the breaks of supply, which is great, and and by doing so, we create areas of demand, for example, down here. But at this stage, I'm not willing to just throw this order on. Here, the idea would be to see evidence of demand holding, to realign that order flow back bullish. Like I say, on the 1 minute, a supply was in control on the way down, so I'm looking to realign that back in alignment with the 15 minute within the context of the 4 hour as well. And so if I just play price on, obviously we're a little bit, we're early in the day, we're not even in London yet, we're kind of in Frankfurt. And if I just play price on a little bit, you can see here that we're within this mitigation now. So perhaps an aggressive, a more aggressive trade execution would be to already be in the trade like this, right? But just a very simple tactic would just be to wait for a slight additional confirmation, show evidence that this is in fact holding, and then play or then look for an execution after the fact, right? After it's held, you might get involved a little bit higher, you might need a slightly bigger stop loss, but you've really confirmed that this is in fact, holding. And so you can see here, if we go through the same process, this is the action that we're trying to confirm initially, right? We have the sweep of liquidity or the mitigation. The action is in the same space. This is the last point prior to both actions anyway, so this is what we need to see to fail. The action now is the mitigation of this demand. Again, looking for the last area of supply prior to that mitigation. Objectively, this area of supply here. You can see here that we push into it a little bit here, we get a bit of a reaction, and then we eventually do fail just about here. You can see here just with the wick, and like I say, with supply and demand failures, I'm happy to use a wick. With anything structural, then obviously it's a body closure. But yeah, we've basically broken area of supply here. We've held the area of demand here. So our first level of respect on the 1 minute of demand, which is confirmed by the additional break of supply. You can kind of see it's a very subtle, but it has broken here like that. And so now the idea is to simply execute. To market execute, you can be really specific on this zone if you want, but the idea is you're going to be wanting to cover the invalidation point behind the trade idea, which is simply below this zone anyway. So now you've got that confirmation that the 1 minute is in fact in control. You've got the flip from here, you've got the reaction to supply, the failure. And so the execution I took on Thursday morning was basically in here at a 6 pip stop loss. So again, I'm not being overly tight with it. I'm not having it here or here. I'm giving it enough room to breathe a little bit. I'm not sure in the exact price I got involved, but I got the executions up here, which I'll show you. But now, okay, we're in the trade, and as you can see, the 1 minute is the execution time frame, but the trade very much isn't based on the 1 minute. We've got our first target here, secondary target up here. So the idea was to basically pay myself here, like I said, 80%, leave 20% to run to here. And so this is the day before NFP, I should say. So at this stage, the idea was to certainly be, have majority of the profit covered way in advance of NFP if possible. Because if this was like a Friday morning, I wouldn't have taken this trade too close to NFP, because there'll be no chance to get risk off, there'll be no chance to pay yourself, and then obviously you've got risks of slippage and things like that. So I want to be if I'm trading NFP week, I want to be in well in advance of NFP itself. So this is the execution, as you can see, built on this 4 hour, 15 minute time frames. And if I go up to the 1 minute just to quickly show you, I'll just play it through a little bit. Hopefully, the trade makes sense. Just play it through a little bit. As you can see, we hit the first target here on the same day. Got the execution here. So this was the execution here. And just as we took this high out, obviously I didn't screenshot it exactly when it, what we're taking out isn't the first instinct to kind of screenshot everything the second you take the position or anything like that. It's just, obviously I do understand the importance behind, proving the trade, which is why I've done it, but it's a little bit, the screenshot's a little bit later. The partial was already taken once this high got taken. And so as it kind of continued going into the next day, the idea was basically stay the same unless something actually changes. And what I mean by that is to see evidence of supply taking back control, because at the moment, because I'm not looking at the 1 minute, I'm looking at the 15 minute, we're still sweeping liquidity to the downside. Coming into the following day, we're still reacting from supply areas, extreme of the reaction leg, the failure of supply, demand continuing to hold, all the way up. And so the idea would be, if you're going to be looking for additional trades the next day, unless you've got evidence of supply back in control, nothing's changed. You've got a confirmed 4-hour target here. You've got a confirmed 4-hour target here. You've taken the partial for this one. You've confirmed up to this area here, unless something changes with the order flow, which at this stage, demand is still in control, still very much in control. And as we come out, very similar to the previous day, Asian sessions here, we take out the Asia low, but we take out some structural liquidity here, which is great, into the mitigation of this demand with demand in control. So possibility for further scalings here with the same sort of premise of a 15-minute target being high, 4-hour target being the same area. But this on this day is too close to NFP release, because just a few hours later, there's no chance to get risk off, but not only risk off because there's still obviously margin for slippage in that case, but the fact that you managed to pay yourself 80% of the profits here, even if you do slip, you'll get slipped off 20% of your profits. You've already paid yourself well enough for it to not really be an issue. 20% of your overall volume remaining, and you're so far away from where you got involved as well. So even if you do get slipped, you're likely going to get slipped not for a net loss, basically. Whereas here, you don't really have the same kind of protection. And as you can see, we whipsaw a little bit, way above where I got in here. And then we hit the target, right? We hit the target to the T because it's confirmed target, which is why I'm comfortable holding, volume through these moments, even though it's high impact news, possibility of slippage, things like that. But because of the fact where I've got in much lower than current price and the volume is already taken off the trade, there's only 20% volume left to run. This is just kind of a bonus of the trade. So the analysis is perfect in alignment with the higher time frame, but paying yourself at intraday levels, having 2 targets, not having 10 targets, where you're kind of splitting the trade up into a million partials, because you just end up with a really kind of messy trade where you're not really made any more than if you're just taking one profit. Whereas having 2 very thorough, thought out targets, I think in my opinion is the best way to do it. So yeah, very simple trade. Order flows remain intact. NFP hit the target to the T, and then we started to reverse. You can see here, this was the first target, took out the high, and the secondary target took out the 4-hour IRL up here, which was up here. And then we took out that target and obviously completely dropped. So it's important to have clear targets in mind. It's not a random target, it's very well thought out. 50-minute target here, 4-hour target here, and now the trade's completely nullified. There's nothing else to target that was confirmed to us. The only thing we had confirmed to us was this. We took it out. It could have continued higher, but it didn't. So paying yourself there, I think, is important. Or like I say, if you don't want to hold through NFP, again, as long as you're paying yourself, you're running a decent amount of profit here, so paying yourself at good levels. But yeah, I'm waffling quite a bit, so I'm hoping this video was helpful, was useful, clear and concise, made sense. Like I see, it's a very thought out, thorough trading approach. So in conjunction with the higher time frames, using the 4-hour, using the 50 minutes to build the trade idea, and just simply execute on the 1 minute. But yeah, any questions, let me know in the Discord if you're in the Phantom community. If not, leave comments on the video, because this is going on YouTube for the people in Phantom you might not know who are watching this in the course. It's going to be a free video as well for our YouTube followers. So hope you enjoyed it, guys, and I'll see you in the next one.